I think if you take the ETFs out of the picture, the price of Bitcoin is like 20 grand because it was 30 when BlackRock filed. It started to go up because BlackRock's coming in. Then they launched. There was a little sell of news, but it hung tough. Now it went up a lot because of the flows. You unwind all that, you're at 30K, but you still have Mount Gox and some of these other in Germany,
hmm
and who's there to buy it?
It's Monday, August 12th, and this is Markets Daily, hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you're actively trading or simply fascinated by the volatility of crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. Good morning, everyone. I am excited to welcome back our next guest. Joining the show now is senior ETF analyst at Bloomberg Intelligence, Eric Balchunas. Eric, good morning.
Good morning. Happy Monday.
Happy Monday. Now, the crypto markets have been a little more spicy than they have in, let's say, the last month or two. Talk to me about what you're watching this morning.
Yeah, it's interesting. Obviously, last if you last Monday was a bad day. Anybody
hmm
who was in the ETF, they woke up Monday to a 15% decline over the weekend. That that's pretty major for one ETF, right? And it's not leverage or anything. Um, and yet last week, the Bitcoin ETF saw 169 million of outflows. That is not bad. That's 0.3%. So 99.7% of the assets hung tough. I'm calling that a big win. So when it comes to the ETF investors, we had always said they're going to be stronger hands than people think. But this is like pretty like next level diamond hands here. Um, and then I think part of why that's good is that if when it comes to net flows, if you can just hang in there and tread water during a rough patch, it's a lot. You keep your base low, a high. That way, when the price comes back and flows are a little easier to get, you didn't have to come back to like square one again. And so the fact that the year-to-date net flow number, which is it's the most important number I'm watching all year for these, is 19.3 billion. That is a big number. And if there's outflows, that number comes down. Inflows, it goes up.
hmm
And that number is net GBTC. It doesn't include the price movement. So right now, that 19.3 is amazing. We predicted 10 to 15 billion in a year. So you're at month 7, 8, and you're already way out of our range, top end of our range. So, but I had said to people when it was like 17, be careful. There could be a nasty sell-off. Those flows could come down and come back into our range. A year's a long time. So for them to maintain that 19 billion-ish during that last sell-off is amazing. So I think if you're in that world, that should be a very, very good sign. Because one of the fears was that people would get in because, hey, it's a new thing. BlackRock's saying it's safe or whatever. And then bam, you get hit with one of these sell-offs, you know, classic crypto style, and they would run for the hills and never come back. But doesn't appear to be any of that's going on. So that would be the big thing, I think, of the past week or two that I've been watching.
I think I asked you this the last time you were on the show, but I think the question is warranted again given the sell off and the performance we've seen. But are you surprised at the spot Bitcoin ETF's performance since January?
Yeah, I mean, I guess what's it up? Let's see the performance since they came out looks like I'm gonna just put in IBIT here. What is it, 25% maybe? I mean, that's with the sell-off. Let's see. 31%. That's really good. I mean, think about that. That's an annualized return of 61% a year. That's
hmm
amazing. I mean, if I compare 31% since they came out to QQQ. Now, in our world, in the stock world, QQQ is like the killer index. Like it's got the Mag 7 at big weightings. It's hard to beat this thing. That's up 11%. So it's triple the Qs. That's great, and that's with a couple sell-offs. And so it's hard not to be pleased with this. I think what's interesting to me sometimes is the emotion and mood of the
hmm
crypto crowd, day to day, week to week. But after all the tears and crying out, you're up. It's up 32%,
There are a lot
31%
of
since the
tears
ETFs.
in this industry.
I tell them like you gotta Yeah, just it's almost like they should force themselves to only look at 1 year rolling charts because the problem you look day to day, you can get depressed easily.
Yeah,
But
it's true.
over the course of the ETF launch, we're now exactly 7 months, no, 8 months, sorry. So 32%. Um, that's amazing. And that's after, I believe, like a 50% jump in anticipation. So
Mhm.
I was actually talking to somebody, and I'll say this, I'm not sure, you probably have users who would disagree. I think if you take the ETFs out of the picture, the price of Bitcoin is like 20 grand because it was 30 when BlackRock filed. It started to go up because BlackRock's coming in. Then they launched. There was a little sell of news, but it hung tough. Now it went up a lot because of the flows. You unwind all that, you're at 30K, but you still have Mount Gox and some of these other in Germany,
Mhm.
and who's there to buy it? So I think the ETFs should be seen as nothing short of a godsend, to be honest with you. And I know I'm not. Bitcoin has other things going on for it. I read up a lot about it, and I think it's a fascinating currency, secure way to store value. And I'm definitely intrigued. That said, pure price, I think that the ETFs really came at the perfect time, to be honest with you. And I think that so when I see people get all crazy when it goes like 56, I'm like, honestly, it should be about 20. So just relax.
Eric, I was gonna say, you gotta be careful with the Bitcoin crowd.
Oh, I know. Yeah, no,
I think you
I
redeemed
know.
yourself there. I think you redeemed yourself there. Well, I gotta ask you then, Morgan Stanley recently told its financial advisors that it's gonna allow them to offer the ETF to some wealthy clients. I guess, from your perspective, does this drive the price of Bitcoin up?
I can't make price predictions,
I
and I
know
hate to
you
do it anyway,
can't.
but I don't see how it's bad that you now open up, you know, depends on how you do the math, but I'm talking 7, $8 trillion. That's the total wirehouse advisor. Morgan Stanley is the biggest one, though. I believe they're like two of just pure advisors. Then you got E-Trade on top of that. I think it's four total, 4 trillion. But the idea that an advisor can now solicit it, I mean, they can call up a client and talk about it,
Mhm.
major. Because these guys move in herds. So if Morgan says they're cool with some of the ETFs, you're probably going to see Wells Fargo, Bank of America, and these other institutions follow suit. The big dream, though, so one is the solicitation. The next thing that may happen, which would be amazing, is if the ETFs get included in their models. So, like if you're a Morgan Stanley, they have people in the home office who make these models. It's almost like they tell you what ETFs to use and what weighting. And then all the brokers who are out in like Oklahoma and Oregon and all this, they are busy getting new clients and doing other things. They're like, I'm just going to use the home office model. And if the model includes the Bitcoin ETF, it radiates out to all of the advisors. So that's also something that could come later. So I just think, and the other thing that I try to tell people who get a little, I don't know, like emotional in their feelings.
So far, Eric, you've called the crypto
So
community very emotional, and I do
yes,
not disagree with you. They are a very emotional crowd, and
it's
I really hope they don't come for you on
well,
X. I really
yeah,
don't
no,
think.
honestly, there's other factions within crypto that are way more that will beat you up more. I think Bitcoin,
Yeah.
honestly, is probably the most reasonable. But anyway, you should. I once called the E3 ETF small potatoes. I have not heard the end of it. Still, I apologized. Anyway, so the one thing I tell the Bitcoin people is that it's not just that these ETFs are out there, it's that there's BlackRock and Fidelity. Because a company like Morgan Stanley, if there were just small issuers involved, I'm not sure they would onboard them or definitely not as quick. But BlackRock and Fidelity's brand name you cannot overstate how much cover this gives people. They use ETFs from these firms in their other portfolios or for their
Mhm.
other investments. So there's a trust there that doesn't exist with pure Bitcoin, but BlackRock brings an enormous amount of trust and cover for, these are like 50 to 70-year-old people managing funds. They go golfing. They have nothing to do with the trust BlackRock. So BlackRock and the ETFs to me are a bridge between those two worlds. And BlackRock and Fidelity want to get assets in these ETFs. They have people dedicated to marketing them. I wouldn't really make it any less simple than that, or any more complicated
Hmm.
than that. There's going to be, as I said to them earlier, 2 steps forward, 1 step back, right? There was a Paul Abdul song back in the day that had that lyric: 2 steps forward, 1 step back. If you look at it that way, when the step back comes, it's no big deal.
Yeah.
So, and I feel like the flows have shown that, the price has shown that, and I think over the next time period. So, I can't predict price, but I would say I see a 2 steps forward, 1 step back process playing out for the next couple of years.
As you said that, I was doing a little dance in my head. The ETF dance, we'll call it now.
I should have an ETF dance. I'm that involved. Like I probably
You
should
really
have one.
should.
Yeah. It's funny, just side note, ETF, right? Back in early days of Twitter when people use hashtags and I was
Mhm.
trying to get really up to speed, I would do hashtag ETF and I'd see all the things people are posting about ETFs. But there was a band called Escape the Fate, like a really bad emo band, like metal emo. It's like,
Okay.
and these 16-year-olds were like quoting these like really depressing emo lyrics. So
Oh,
it'd be like
no.
flows, flows, and then some crazy lyrics. so so I was just like, so if there was an ETF dance, or I always said that band should play the ETF conference because they're
Yeah.
they're known as ETF, Escape the Fate. So if you Google Escape the Fate, enjoy.
I'm going to Google that afterwards.
How,
Yeah, I'll try and find the best ETF lyrics. Maybe that could be something we do on the show, like find
sure.
an Escape the Fate lyric that matches the mood for ETFs that week. We could just bring it all together.
Yeah, there's a lot of despair. It's like I said, it's like I'm on the edge emo.
Everyone kind of is. No matter what aspect of this
Actually,
industry
yeah,
you touch, you're
yeah,
kind of on the edgy mode.
that's true.
Yeah. Well, I gotta ask you about a tweet. It's to do with regulation. I know that you probably don't have much to say about regulation, but let's just see. John Reed Stark. He's a former SEC Office of
Yeah.
Internet Enforcement Chief. I'm sure you saw this tweet. He wrote that Morgan Stanley has now voluntarily subjected themselves to what will likely become the largest SEC and FINRA examination sweep in history. This is, of course, because of the news that you and I just discussed. What do you think of that? Do you think that it's going to scare away others?
No, this guy, you know that meme of The Simpsons, the guy yelling at the cloud?
Yes.
That's all I see here. I mean, this is a
Okay.
guy who just something about this just pisses him off. There's there's people there's there's people who are agnostic.
Hmm.
Like I don't see the point, but whatever. But then there's just people who just like they can't live with this. Like they are the inverse to some people who are so hardcore they can't live without it.
Hmm.
And this guy seems like one of those guys. And I got to write off a lot of it as just hurt feelings and bias. He didn't want the ETFs to get approved. So he's been taking L after L. He didn't want the flows to come in. He didn't want there to be demand. He didn't want, people to be happy. And like L, 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 L. So, if you're like 0 and 8, you're going to get a little cranky. So I think all this is just, you know, uh, him just being upset about everything. The, if somebody who was bullish or like moderate had said it, might mean more, but
Hmm.
probably going to blow. We deal with applications and certain people who have been fear mongering on ETFs in general for a long time, and every now and then there's somebody in the middle who makes a good point, but there's a couple people who like that's just their thing, and a lot of times it's an active manager who is upset that ETFs are taking their business. So like you have to unwind that, and sometimes the press will run with it and use a headline that's like, um, you know, uh, some worry ETFs could blow up the market. Then you look at the article and you realize, okay, who said it? Oh, it's this guy from like, you know, XYZ asset management. I look up at he's got an active fund that charges 2% and has said outflows. Well, he's just pissed. The headline should be pissed off active manager slams competition. So I think in this case, you have to really look at his whole like MO with this.
Mhm.
The other part of it is, if a Morgan Stanley advisor or broker misleads anybody, that's a problem. But again, look who's behind this. The SEC approved them. I mean, that's one. So any kind of investigation, you got to go back to the SEC and be like, well, you approve them.
Mhm.
Number two, the exchanges are letting them list. Number three, BlackRock and Fidelity are in there. Larry Fink's, you're going against the entire system here. This isn't, he might have a better point if they were going to, I don't know, like off OTC market to buy actual crypto, like almost like on the side, and there was no regulation. But these are like regulated instruments with prospectuses and risk disclosures. I wouldn't worry about it. I would just, again, go back to SEC approved. These are mainstream, ready for middle America kind of uh, structures, the ETF. And you've got the most biggest and established companies involved who are making sure nothing goes wrong. BlackRock does not want anything to go wrong. This would ruin the good thing they have going, right? They're not they
Mhm.
because some people will come with me and say, "Well, how do we know BlackRock even holds the Bitcoin?" Or sometimes I bet would see flows, but the price wouldn't go up. And they're like, "Larry he's just holding the money, like he's not buying Bitcoin with it." They are buying Bitcoin. Okay, these companies are not going long or short. All they want to do is get a little tiny expense off of the total assets. So the bigger they grow the pie, the more they get. They don't want to be long or short the crypto, and they don't want to get sued, and they don't want to have a PR problem. They got many other ETFs too. This is not their only thing. So I sometimes think that crypto Twitter isn't used to like the sort of mainstream like legal world and how rigorous it is. I think the approval of the ETF, you saw all those documents that had to be filed and all the tweaking and the legalese. That is a ton of work, right? But once you get through that, you are in a regulated instrument and can be available anywhere. So I think this guy's point, he's all the institutions and companies that he's now saying are like in some kind of like, it's like almost like they're selling drugs or something. I mean, it's just too much. It's too powerful. And it's, again, let's go back to, it's too regulated.
Mhm.
These ETFs are regulated. So um, I, I don't really see it, but I, it's important people have voices. I'm not trying to shut him down or whatever. Like he should say what he wants. That's just my take on when I read it.
Right, and I think we should take what we read on X with a grain of salt, and it all comes back to doing your own research, right, Eric? So I'm happy that you provided that other point so folks can take both and kind of figure out what they think and where they stand. Eric, it is always a pleasure having you on the show. It's always so much fun. So, just before we wrap up here, I want to ask what you're watching towards the end of the year. I know that we have the Bitcoin ETF options that could happen before the
Yeah.
end of the year. We have the potential for a SOL ETF. What are you watching? What's next when we look at crypto ETFs?
Okay. We're looking just crypto. Okay. So the we have another round of 13Fs about to come in. So we're starting to see who else bought it in the second quarter or the second quarter of the ETF's life. That should be interesting. We're already seeing two new pensions. How many more institutions will get involved? That's what we're watching. Also, looking at the flows, they held up nicely. I would guess that if we go flat or the price goes up a little bit, you should see some steady flows coming in. And how big are they? Because how much is Morgan Stanley? I believe Fidelity and IBIT are the only two of Morgan Stanley. It's interesting to see if those two see like an anomaly of flows in versus the rest, because we have a control group now. We'll know that the wirehouse effect is real, and we can sort of judge how big the wirehouse effect is. That we're watching that as well. The options, we just wrote a note saying that we think they'll, 75% chance they'll be approved this year. We just saw that CBOE refiled their, I think 19 before, I believe it is, after getting comments. So we confirmed and talked to some of the people that the SEC did give comments to the options filings. That's really good. SEC is not going to engage if they just were going to deny it. Remember, with the Bitcoin, that was our big that
Hmm.
we hung our hat on that. The communication spoke to approval, and it was right. The Ether, they had no communication until the very end. That's when they did communicate, our odds went up, and then the rest is history. So the communication to me is really good. I'd be pretty optimistic, but you can't really be 100%. We have a little less information on this than we did the Bitcoin and Ether together, but it looks pretty promising given. And the new document they filed is like 6 times longer, and
Oh,
like
wow.
position limits was something I heard the SEC was worried about, and the word limit was in the first document 5 times. It's in the next one 65 times, something like that. So that tells you the
Wow.
lawyers got crazy. Yeah. So yeah, that's so we're watching to see how that plays out, and we think uh, it's looking good.
Are we going to see a SOL ETF next year, do you think?
It just depends if the White House stays the same. I think
Hmm.
if you have Democrats staying in power, they're going. I don't know if Gensler will last, but let's say he does. No way. Let's say they do Gensler 2.0. No way. I think if the Republicans take over, anything's possible because, especially Trump has been making sort of some relationship and inroads with this crowd, and he may be much more open to like all kinds of stuff. If Hester Peirce was the chairman of the SEC, I think you'd have to look at at least decent odds of a SOL ETF. She's a lot more libertarian. She dissented all the way since 2012. She was dissenting on the denials of the Bitcoin ETF. So
Hmm.
you have to imagine if she's the chair, all kinds of things could happen. So November, big catalyst for your question there.
Eric, like I said, it's always a pleasure having you on the show. Thanks for joining this morning.
Yeah, thanks for having me.
Of course, and to everyone who is watching, listening, thank you for following us and coming along on this journey. If you don't already subscribe, you can subscribe on any podcast platform. We are the CoinDesk Podcast Network. And if you like to watch, subscribe to our YouTube channel and be sure to give us a thumbs up. Thanks so much for listening, and we'll see you tomorrow.